Hey everybody, how you doing? Rich the Architect here again, and today I have a guest. Today, I'm excited to talk about. We're going to talk a little bit about flooding and whatnot. So I have Tyler Ardron from Risk Reduction Plus. They're located in Pittman, New Jersey. And Tyler, thanks for coming on.
Yeah, Rich, thanks so much for having me, man. I'm excited to be on.
Yeah, great. We can kind of get a little nerdy about some
Fun stuff.
some flooding stuff. But yeah, Tyler, why don't you just start, just kind of introduce yourself a little bit and what Risk Reduction Plus provides.
Yeah. So like you said, Rich, my name is Tyler Ardron. I'm the vice president and partner with my brokerage, Risk Reduction Plus Group. We specialize in flood insurance. And then we also in the tri-state area provide homeowners, auto, and small business insurance. But we got our feet wet, so to speak, in the insurance world with flood insurance. When we opened in 2014, all we did was flood insurance for the first 2 years. Yeah, 2 years, I'd say. And I've been with the company going on 9 years now. And like I was telling you earlier, my parent company, Smart Vent Foundation Flood Vents.
I'm
It's a
familiar with those.
manufacturer.
Yeah.
Yeah, everybody does,
Yeah.
especially an architect who does business down the shore.
Yeah.
And yeah, that's my parent company. And the reason why we got started in the insurance industry is these vents save people a flood insurance. So originally we tried working with insurance agents. That when I started, I was just with Smart Vent. And we found out there's a real lack of knowledge with the National Flood Insurance Program and FEMA and flood insurance in general in the insurance industry. So instead of training these insurance agents, which we did for probably about 2 years, we said, we're showing them what to do. Why don't we just do it?
Yeah.
So I got licensed. I became an agent. I was the first agent. And then, yeah, that's fast forward to today. We've been able to save people over $12 million on their flood insurance nationwide. We do flood insurance nationwide. Smart Vent manufactures vents nationwide. And yeah, that's kind of where we're at today. I'm my licensed insurance broker, as well as a certified floodplain manager. I've been a CFM now since I've been here 8 years. And yeah, like you said, we can geek out on some flood stuff. There's not many of us out there. So
Yeah. Yeah. Well, it's funny because I was just thinking real quick with my clients that I've dealt with down at the shore, and like with flood insurance and all that is first part, like with the Smart Vent, it's like it's easier for a customer of mine to understand when I'm like, hey, the building code requires that you have a Smart Vent or a flood vent of some sort. It's going to tell you every 200 square feet or whatever you need to put a vent. So here's 1,200 square foot crawl space. You need to have 6 vent. That's easier for them to understand. But then when it comes to some of the insurance stuff, it's like, well, you're not required to do this. Like, the example would be like an existing building.
yeah,
Right. You have an existing house. So the discussion may be, do you raise the house or not? And it's just like, well, you don't have to raise the house, but then your insurance, it's going to affect your insurance. And now they're like, well, how much is my insurance going to be? I'm like, I don't know. Let's, you need to talk to Tyler, it's just like, I don't, that's kind of where like my expertise ends, like, and yours, I guess, begins in a way. So, why don't you like first just kind of, maybe that scenario I just gave.
Yeah, sure.
Let me add just one quick layer, and it's a real world experience that I had. I had a client who didn't want to raise the house, but wanted to build an addition, but knew that if you built a certain size addition, you then would be required to raise everything. So he wanted to take the approach of, let's say, whatever, it was 10% of the existing square foot of the house.
Right.
Just wanted to build it in phases, do 10%. So you didn't have to raise the house, wait the year, I think it was for the assessment.
Yeah.
Once he gets the assessment, then do another 10% down the road. So explain the audience, I guess, first the effects just kind of typically, and then maybe if you have any insight on that scenario I just gave you.
Yeah. Yeah, so typically, to do what, like you said, one of the things we do is service, it's called the flood risk evaluator. And it's really why we opened this insurance agency, is to, we look at someone's flood insurance and then we tell them exactly what they need to do to lower their flood insurance. But then we're able to give what the flood insurance will go down to so they can get a true return on investment. An example would be, I have a guy with a crawl space paying $3,000 a year. I look at it, I tell him to install the flood openings, brings him down to $1,200 a year. So he got a, $2,200 savings. Usually the savings pay for the events just, themselves.
Right.
And then, they're a happy camper because they're now paying $1,200, kind of going forward, as opposed to $3,000.
Yeah.
So we provide mitigation steps like that. Specifically the flood openings. The reason why they help is because they exempt the lower floor level from insurance rating. So if you go down the shore, or if we have listeners elsewhere in the country, the beach, most houses are built up on an enclosure or a crawl space, and an enclosure meaning like a garage or something like that. And the reason they put vents in is because we can exempt that level, and now I can rate them off the next higher floor level. Currently, the way the National Flood Insurance Program rates their properties is based off elevation difference. So an example would be, I have a house that's at 8. Let's just say slab on grade for easy numbers. It's at 8. The BFE's at 10. Well, they're 2 feet below BFE, and a -2 typically pays between $2,200 to $2,700 a year, depending on the coverage and residence type and all that stuff. But, going back to the enclosure example, if that bottom of the enclosure is at, let's just say 5 for easy numbers, and the BFE's at 10, and if they don't have vents, they're a -5.
Yeah.
They're going to pay around $5,500 to $6,000 a year for flood insurance. We then install the flood openings, exempt that space, and let's just say the next higher floor level is at 10. Now they're at BFE and they're paying $1,200 a year.
Right.
So it exempts that space. And the reasoning on behind why it exempts the space is because it's called wet floodproofing. You're allowing the water to pass through that unfinished space. And what it's doing is it's reducing the hydrostatic pressure. Because if you don't have flood openings, that water can build up and it could collapse the foundation.
Yeah.
So it's a lot more risky from an insurance end. And that's why they're paying more money, ultimately.
Right.
For their flood insurance. And then to go back to your original example of the whole substantial improvement, we call that, if they're doing a 50% or greater change to the building, they have to come up to current code. And current code being in the state of New Jersey, there's a 1-foot freeboard requirement, meaning building 1 foot higher than the BFE.
Just for anybody, BFE is base flood elevation.
Yeah. So that's the and we're getting technical. People are like, what the hell? The BFE, so the base flood elevation, is the calculated level that water will rise to, or FEMA estimates water will rise to in a given storm event. And like I was saying, the insurance is going off the BFE and the floor levels. So wherever your floor level is compared to that, you get that elevation difference. That's what gets us the insurance rate. But if they're doing a substantial improvement on the home, which is a 50% or greater change to that building, like that addition you were talking about, then they have to come up to current code, meaning 1 foot above BFE, flood openings, mechanicals above BFE, anything that you would do for a new construction today, because the codes are a lot more stringent today than really they ever were.
Right.
And to give you an idea, when we start with SmartFan in 1999, which was obviously before me, it wasn't required, flood openings. It wasn't a requirement. And in 2004, it really picked up. They started requiring it, but it took a little time from that. And the reason why is, the codes require it, but is the code official enforcing that, which is a big thing, especially around the country. It's still, there's still areas around the country that the codes are in place, but they don't enforce it.
Yep.
And
I can attest to that.
You deal with that on a daily basis, I'm sure. So a big piece of what we do is we work with code officials and try to train them on what's right and what's wrong. And what they're required to do. But like I said, for your question specifically about the substantial improvement, they got to come up to current code if it's a 50% or greater change. And, that a lot of people don't want to do that. Especially I work with a lot of investors up in North Jersey. A lot of investors buy properties in Union Beach, all these coastal areas that are primary residences. So not like Ocean City and stuff, more Union Beach, Keensburg. Up in Monmouth County, there's a lot of primary residents that are flood zones.
Right. And if for anybody who might be listening who's not familiar with Jersey, I mean, they're close to New York City,
Yeah. And I work with a lot of investors that, want to flip properties in them areas. And that's one thing I make sure to talk with the investor about is that, hey, if you're going to flip it and you're looking to make, if it's a 50% or greater change, you're going to have to, if the house is below BFE, it's going to have to be elevated. Mechanicals, everything I just said a couple of minutes ago. So that's definitely something to look at, especially when you're if you're an investor looking to buy properties, and looking to see how much you're going to put into it. And you got to account for, if you are doing that 50% or change, you got to account for the lift. So, you got to have that in your numbers. And because I've also dealt with investors that didn't know that and wasn't told that. They're looking to flip the house. Now they got to put another 50, 60K into just elevating it.
Right.
And that could throw off the numbers by a lot.
Yeah. Now what's the effect of, like, if you have, like, when we're talking about enclosures on existing buildings, let's think of like an old house where basically the living floor is right there at grade. So what happens on the insurance side when you have one of these old houses? Is it just a simple fact of, well, no, I guess it wouldn't necessarily be like, so somebody's family, there's a lot of families who own properties down there, and they could have had it for 50 years. They don't want to necessarily raise the house. So from on the insurance end, what, in a situation like that, what's the implications there?
Yeah. So, the NFIP, and for the listeners, that's the National Flood Insurance Program. That's the government program that does handles the flood insurance nationwide. So if the house is, let's just say a house in Cape May, because for people who aren't familiar with the area, Cape May has a lot of older houses that families have had for 50 years, 60 years, like your example. And if the house is below BFE, like a slab on grade, or I've even seen basements in Cape May, which is kind of crazy.
Wow. Yeah.
But, let's just pretend they have a basement. Worst case scenario, previous to 2012, you were allowed to get what's called a subsidized rate through the National Flood Insurance Program. So what a subsidized rate was, and really is that you didn't have an elevation certificate. So they didn't know what your elevation difference was. And what they would do is, like, if you were coming to me 10 years ago and said, hey, Tyler, I want flood insurance. I don't have an elevation certificate, but my house has a basement. So I would say, all right, basement, subsidized rate for that basement is $1,300 a year. That was 10 years ago. They came out with the Bigger Orders Act that said, we don't know what the actual risk rate is on a lot of these homes. So what we're going to do is increase them 18 to 25% a year until they hit their actual risk rate. And the only way to get the actual risk rate is with the elevation certificate, because the elevation certificate gives you that elevation difference that I was talking about. -1, whatever. Right. So then people, because it was instituted really in like 2014, those increases, 2015.
Yeah.
They've been going up and up and up every year. And what they need to do is get an elevation certificate. That elevation certificate, let's just say in that basement, because that's like a really bad case, shows that they're a -10, let's just say 10 feet below the BFE is where that basement is. They're going to keep going up until they hit $11,000 a year for flood insurance.
Right.
And they can keep the subsidized rate today because the home is called it's a pre-firm home, meaning it was built before there was any flood maps.
Yeah.
So you're looking pre like 70. They can keep it, but they're going to keep going up until they hit that $11,000 mark, unfortunately. And in that case with the basement, the only thing that they can do from a mitigation standpoint is filling it in and putting vents in, turning it into a crawl space. But even that, where that living floor is then matters too.
Yeah.
Because if the living floor is below BFE, doing all that stuff will help, but it's not going to be like from $10,000 down to $700. It'll be like $10,000 down to like $3,000 or $4,000.
Right.
So yeah, to answer your question for that basement, that's kind of what they'd have a subsidized rate. They've seen the increases $300, $500, $600 a year. And from there we got to mitigate it. Now, I will say, and this is kind of the kicker, the NFIP is coming out with a new rating system. It's called Risk Rating 2.0. And this is the first change that they've made in really 50 years to the way they rate. Because remember, I said, the elevation difference, that's how they get the rate.
Yeah.
Going forward in October, when this comes out, they're going to be more like a private flood insurance company, where they're going to take into account ground elevation, cost to rebuild their house, distance to flooding, all different variables to determine what that rate actually is. So it's a big change. We don't know what the rates are yet. It's supposed to come out next month, August, to be able to see. But like I said, it's a huge change. First change since 68, really, 1968. And hopefully that will be able to help people. We don't know yet. We shall see.
Yeah, so you're not sure if this ends up raising rates or lowering rates, or?
Well, we do know. So I work with a lot of the communities across the country from a flooding standpoint. I do know the amount of increases in each county. So I can I can pull up Cape May County and tell you 50% of the properties are going to go up this much amount of money, 20% are going to go down this much, whatever the percentages are. That data is released. Some other data that came out is right now, the National Flood Insurance Program's top rate is $46,000 on a single family house. They're lowering that down to around $12,000. So that sounds like it's good for people, but who knows really? And I got the percentages, but I can't tell someone if they called me, what's going to happen with my policy. I won't be able to do that until those rates are actually released.
Yeah, because it sounds to me the current process is a little bit more generic across the board.
It is,
and this takes into account of site specific conditions to determine,
which is a good thing, because if you think about the insurance industry in general, let's do something that the listeners would be able to relate to. Car insurance. They're not just looking at how many tickets you've had. They're looking at how old you are. They're looking at your sex, are you male or female? They're looking at, everything. They're where you're at. If you're in the city, you're going to pay higher amount of car insurance because there's more cars. If you're in a rural community like Franklinville, you're paying lower auto insurance because there's less cars on the road.
Right.
So they're taking more of an insurance model, which 100% makes sense, because, and I'll give it a flood example now. We have someone in Gibbstown, let's just say New Jersey. And for those who aren't familiar with Gibbstown, it's an area close to me and Rich here that's on the Delaware River. Those people, because they don't enforce flood codes really. Those people have basements and, mainly basements. But those people, because they're in a flood zone, they're required to have flood insurance, and they're paying way more in flood insurance than someone in Ocean City, New Jersey. Because in Ocean City, the elevation difference, they're built up. Whereas in Gibbstown, they're just like, go build a house. The person wants a basement, they build a basement. And now they're below BFE and they're paying a lot on their flood insurance. And this new rating model will take into account, all right, they're on the Delaware River. They do have a chance of flooding, but it's a lot less than someone that's in Ocean City, New Jersey, that if a hurricane comes up, they're going to get smacked. So it's definitely good. But we'll see what these rates actually do.
Yeah. And you kind of make and I've lived this, is that one thing I found interesting working on shore projects, because I have houses built in, 3 different towns, Stone Harbor, Avalon, and Margate. And Stone Harbor and Avalon are on the same island. They're this towns right next to each other.
One street, Stone Harbor, one's Avalon.
But each of those 3 towns deal with floodplains and how they want their houses to be built in different ways.
Yep.
One town's going to say, the freeboard is,
2
like
feet
is the
or-
foot up, but they want it to be actually like Avalon, I think is
2 or 3 foot probably.
yeah, they want to be like they don't want to be 2 feet above the floodplain. They want to be 2 feet above the freeboard,
Yep.
and then Margate deals it with a different way, a different
Yeah.
way. Like I think
And
Margate.
the reason, real quick, Rich, the reason why they do that, especially in Jersey, because in Jersey, I do stuff nationwide. In Jersey, we are well ahead on the code side compared to your Louisianas and stuff like that you would think would be up.
Yeah.
Jersey, we're pretty far ahead, and I attribute that to Sandy. I was working in this world during Sandy.
Yes.
And after Sandy, they've really picked the ball up and enforcing stringent codes. But the reason why the towns are different from a freeboard standpoint is the NFIP offers this thing called the CRS, and it's the community rating system.
Okay.
And I'm in a lot of these CRS groups, but basically what it is the town joins it, and then they enforce more stringent codes. And by doing that, it gets them points, and these points put them into a class system. So this class system goes from 1 to 10. The lower that class system, like Sea Isle City is like one of the lowest in the state. The lower the class, the bigger the discount that everybody in that town gets on their flood insurance.
Gotcha.
So if you do 3 foot freeboard requirement, let's just say, you're going to get more points than someone doing a 1 or 2 foot.
Right.
And a lot of people don't like that because they're like, I don't want to build that high, but you're getting a 30% discount on your flood insurance because the town's doing this.
Yeah.
So that's one of the reasons why they do that, though.
Yeah. And it's funny because like I remember last summer seeing an article about, development in Sea Isle where there were complaints from residents that they're like, these new houses are so big compared to the existing ones. And there's your reasosoning right there,
Yeah. They're getting a big discount.
Yeah. And I was going to ask the question but you've already answered it. I was like, well, yeah, why? I know what the code is, and it's frustrating for me as an architect because I'm like, it's not the same across the board.
Yeah.
And then there's intricacies as well that, but understanding now, I'm like, okay, well, there's the reason why they, each town has their different things.
Yeah. So the code official in Sea Isle's name's Neil Byrne, who we're good friends with. We see him at the flood conference every year.
Yeah.
He's a great guy, but he brought, so Sea Isle was, how long ago? 10 years ago, maybe. They were actually in violation of the National Flood Insurance Program. And the reason why is they were allowing bonus rooms, which is you walk in your garage, you walk up a step, and then you got a bedroom for somebody, and then you go up more steps, and then there's the rest of the house. Well, there can't be a bonus room down there. They were in violation by the NFIP. What Neil did was he created summonances for all these homes. There's like 300, brought them into court, made them rip out all those bonus rooms. And in doing that, he's just, every year he's gotten better and better. And now, the freeboard's 3 or 4 foot in Sea Isle, but this guy's like kind of famous. Like the mayor loves him. He's getting the town, like one of the best classes in the country from a CRS standpoint. He's getting the town like a 30 to 40% discount on their flood insurance because of this. So, and he's protecting the buildings, right? Because we know that the higher that living floor is, the less chance that they're going to get any water in that area.
Yeah.
So people hate it. And like you said, there's articles all the time that, hey, the roof line's getting higher and all this stuff. But, we got to know. And with weather, it's getting more and more extreme. I mean, you see it. There was just a tropical storm 2 weeks ago. You're seeing it more and more. And I don't know, why that is. I'm not an expert on that. I'm not going to talk about global warming or none of that.
Yeah.
But it's pretty much a fact that it's more extreme storms are happening. Harvey, we had in 2017, Irma down in Florida. It's coming every year now, as opposed to 5 to 10 years. It's just, is it going to hit our area or that area? And if it does, let's make sure that these houses are protected.
Yeah. Yeah. It's funny. Well, cause you had mentioned so you were working in the industry when Sandy hit, and so was I. I mean, I was right in the center of, all the shore houses, well, except I have a current one now in Stone Harbor. an individual homeowner, but the other shore houses I've done in the past were for one developer. Like they were buying up bayfront lots, and either it was an empty lot or, you know, there was an old shack or something. They tore it down and built new. So we were building at the time. There was a house actually just starting duplex being built in Avalon. And then I had another house in Stone Harbor. And I think we had already completed one in Margate, maybe two in Margate. But the house in Stone Harbor was still going through the building permit. Like the drawings were submitted for building permit and all that. And then the house in Avalon, actually the piles were delivered to do the foundations for the on the site the week before Sandy hit.
Oh yeah.
So they were literally, and they were in I mean, if you're familiar with, you know how like they have, Avalon has like I'll call them islands, the back of the bay islands, right?
Yep.
So their house is
with the dunes and all that.
It was like, you know, right there on Ocean Drive. So there's the kind of that, like, it's not a river, but you know, there's a water, but there's you know, it's not like a bay where it's just like, you know, there's houses on the bay, but there's houses on both sides of the water.
Yeah.
At this location. So my client told me, you know, because I was, you know, after Sandy had hit, you know, we were having a discussion. I was like, oh, how did those properties do? Well, he said, well, you know, we didn't install those piles yet. And he's like, and I have to buy them again because they all left the property because when they were like, they were there during the actual storm. He's like, but
when it receded.
When the water receded, basically there was the only empty lot. So he's like, we were the drain.
Yeah,
so all the water in the island went everything there.
With it.
And he goes, the houses across the waterway were very concerned because they were watching these 30-foot piles shoot out of their property towards their house.
Yeah.
So you know, so he's like, yeah, we got to buy them again and all that. But we had gotten at the time, a lot of pushback with builders down in the town. Yeah. Because my client was from Philly. They were just kind of new to the town. They had done work. He actually lived in Margate for a number of years and built houses, but like back in like 2000s.
Okay.
And it was like, and I'm living with a, you know, he's still a client of mine today. And it's like, yeah, we built those houses, you know, more than 5 to 10 years ago, but haven't done anything since. So he's kind of sitting, but I'm like waiting for the call to happen again. It's kind of another cycle where I could see, like, it seems like he buys properties, let's say in down economies, and you know, the next couple of years, it's not going to surprise me if that's what he's going to do again. But yeah, so I was designing these houses like, oh, well, we're going to put these on piles. We're going to have them up, you know, breakaway walls, things like, you know, things like that, you know, not just a, you know, masonry wall with some flood vents, you know.
Right.
We got so many pushbacks from builders down there. They're like, that's not how we build down here.
Yeah.
And you know, fast forward to after Sandy hits, and everybody's rushing to have some kind of new rules in reaction to what just happened with Sandy. Avalon eventually starts telling builders, go to that property on Ocean that's getting built right now. That's how we want it.
That's how we want it built.
Yeah.
Pioneer.
So, I was like, there we go. Yeah. You know, like, look at you guys, Mr. Builders, giving me a hard time.
Ahead of the times.
Yeah.
Now you're calling me to see how to do it.
Yeah. So, and then on the opposite, well, over on the Stone Harbor property, now that one's still being submitted for permits. We're going through a review. We literally had comments from the town. I had the drawings like ready, like I may have even sent them down to the office, but we had not got approved yet for the permit. Governor Christie at the time makes this an announcement about like, well, everything that's not in a permit has to abide by these new rules that we've just established. So, and they were being extra conservative at the time. So I remember basically, long story short, with the house was didn't have the permit. So we had to redesign, we had to start over the project and redesign the house. I mean, it was simple in terms of like, okay, well, the first floor has to go at, let's say elevation 10. Now it has to be at elevation 14 to the new rules. But raising it 4 feet meant that there was more steps. meant that I had to shift the house back so that the
Yeah.
steps weren't in the sidewalk, that type of thing.
Right.
And it's funny, like, if you go by that house now, it's like it's way up here, but then,
Next
but then
door is down.
it came down, I think another 2 feet is like the current thing.
Yeah.
But it was one of these things with my client. I was just like, we got to start over, and I got to I got to do more work. So I got to charge you. And
charge you for the
it
hour.
wasn't like I did something wrong. And we were literally probably
there's nothing you can do about it.
Yeah. A day away of having to do
Just
that.
submit them.
Yeah. So we had one where we're like, we were the example, but then we had another one where we had to completely
Restart.
change it.
That
And,
sucks.
but so on staying with Stone Harbor for a second, because I was, whether I mentioned it here or before we started recording, about I had the one project that I have a current project where we're just building an addition.
Yep.
I take the attitude of, unlike, the example I gave you earlier where that client wanted to do 10% and 10% and all of that.
Yeah.
Is if we're doing a new addition forget what the size is, we just have to go to the new requirements. Is that on the insurance side also what you would?
So on the
require as
insurance,
well, or?
on the insurance side, there's no requirements,
Okay.
to be honest, right? So the building codes is what's enforcing the requirements.
Yeah.
The insurance, though, goes off kind of the building codes. And what I mean by that is, you build that addition, if it's below BFE, you're going to get tacked on from the flood insurance, for it, meaning you're going to pay more money, as opposed to if you go to elevate it, it's going to be cheaper. Currently, not talking about risk rating 2.0 and that stuff, because we don't know enough yet about it. But currently with the NFIP, you'll just pay more money. That's basically how it is. And if you do everything right from a code standpoint, your flood insurance is going to be cheaper. It'll be cheaper. But from a requirement standpoint, like, you can still get flood insurance no matter what you do. It's just how much you're going to spend on it a year.
Right. And then what's your involvement, like, if somebody's selling a property? And let's go back to, the example you gave earlier, the Cape May house with a basement. If that house was being sold, what's your involvement there, and what are the implications that somebody who might be purchasing that property would have to deal with?
So about 80% of my business comes from the real estate industry, meaning realtors and mortgage reps, loan officers, stuff like that. And the reason why is that when someone goes to buy a house, they're required to have flood insurance, and I'm the flood insurance expert. And it's a lot harder to sell a house that's $4,000 flood insurance premium than it is $1,000 flood insurance premium, because the flood insurance gets tacked into the mortgage, and $4,000 is like $400 a month that's tacked onto the mortgage, as opposed to $1,000 that's only $100. Right. So for that example, the basement, we would have to get creative. And what I mean by that is I would do two things. So if I was working with the listing agent, meaning the real estate agent who put the property up for sale, they would reach out to me and say, hey, Tyler, I'm putting 100 Beach Ave, Cape May, New Jersey, for sale. Let's get flood insurance situated so that when a buyer comes in, they don't get scared away. And why I say that is they're going to look at it. First question is going to be, what's the flood insurance? They're going to find out from an insurance agent that it's $4,000 a year. And then they're going to say, we don't want this house. So we get ahead of it by saying, there's two things you can do. One, if you do these things to the house, it'll bring the insurance down to here. Maybe the seller wants to do them things, or maybe the buyer wants to do them or put it into the contract to get the flood insurance, lowered. Or two, there's a thing called private flood insurance. Private flood insurance is basically, like I said before, the same as risk rating 2.0 is going to be, where they're taking like 100 things into account, and they're going to say, this is what the rate would be, but they're able to accept and decline properties. Why that's a good thing is if they decline it, they're not taking it on, they're not taking that risk on. If they accept it though, they have a smaller risk pool, so they're able to give a cheaper premium. Generally it's 20 to 50% cheaper than the government. Okay. So in that, I would run it, because I have the most private carriers really in the country. I have 12 to 15 different ones. I would run it through all of them. If I can get one through that, it's generally 20 to 50% cheaper than the government. And that could be an option as well if they don't want to do the changes to the house.
Yeah.
So that's like what I would do if a realtor reached out. Like I probably have 3 realtors right now that I got to do stuff for.
Yeah. Yeah.
And that's what I would do so that when the buyer comes in, they see we have options. And we can make the transaction smooth throughout the real estate.
Yeah. Okay. Well, and then also, I mean, we're talking a lot about like, beach properties, but there's obviously other waterfront. I mean, you kind of mentioned a little bit that other, like Gibbstown had it was really like a river, but like I was just up in, I was telling you before we were recording, I was just up in New Hampshire with the family for a couple days, and we had rented a lake house.
Yeah.
And I think it was the last night we were there, it had rained overnight, and I came out and like the dock was like halfway in the water.
Yeah.
My youngest had like, it was like, had a bunch of toys out, and like half of them were
gone.
Luckily they didn't float away, but they were still in the water. The night before, my oldest and I, there was a boat on the property, and we took it off the dock and we took it into the land, but then in the morning it was like halfway in the water again.
Yeah.
Well, luckily it filled with water, so it kind of weighed itself down.
Yeah. So it's that. Okay.
But there's obviously, I mean, I would assume, you would deal with properties like that too.
All the time.
Yep.
Union Beach, like we were saying, Gibbstown, Burlington City, Burlington, Carneys Point, Pennsville. These are just towns in New Jersey that are riverine areas. Pennsylvania, Conshohocken, there's flood areas that aren't coastal beach, properties. Connecticut, there's a lot. New Hampshire, there's lakes, like you said.
Yeah.
South Carolina, North Carolina, all over the country. There's riverine. Illinois, in the middle of the country.
Mm-hmm.
I have an insurance agent that works for me that's in Illinois. There's a lot of flood riverine areas. And they're the ones that, to be honest, that I think will benefit the most from Risk Rating 2.0 that's coming out in October.
Mm-hmm.
And they're also the ones that generally I can get private flood insurance for pretty cheap, because the private company was ahead of the game. These private companies, they came out like 5 years ago and they said, the way the NFIP is doing it doesn't make sense. You got this guy in Gibbstown paying $3,000 and you got Ocean City paying, $1,000. So they said, we're not going to write someone in Ocean City, but we'll write that person in Gibbstown for $1,200 a year, which is a ton of savings. And, they probably never will have a claim, hopefully.
Right.
So yeah, that's for them ones, the best option is normally private flood insurance.
Yeah.
Because they're not built to like a flood standard, like we were saying, they have basements, slab on grades. They're not built up like on the garages, like they are down the shores and stuff and the beaches. Mm-hmm. So them ones are, more of a private opportunity. And like I said, I think Risk Rating 2.0 is going to help them properties a lot more too.
Okay. There's it's fun. I'm just thinking of that show Ozarks.
Yeah.
Right. Because it's
so I was there 2 years ago for a surveyor conference.
Okay. So
it was cool.
Yeah. Now and I'm again, I've never been there, but I'm just from watching the show.
Yeah.
It seems like it's a more of a flat area, but it is a lake community.
Mm-hmm.
Does but let's just say there's a different area similar to that. But like maybe like in a Colorado or somewhere where there's mountains.
Yep.
Are there any differences, I guess, geologically or
so
topographically with it may be like a lake property, but does the surrounding area affect that in any way? And I'm asking because I've never dealt with stuff like that.
Yeah. So the Ozarks in specific, that's why I was there. A lot of it, there's a ton of flood areas and flood zones and flood properties. Same with Colorado, actually. There are a lot of flood areas in Colorado. One of my private carriers are based out of Colorado, Boulder,
mm-hmm.
Where there's flood areas. And the difference is that, here in New Jersey, we're almost at sea level. Yeah. So same with Louisiana, even more so. But in New Jersey, to give you an example, we were talking about like an 8 or a 10-foot BFE. When you get to the middle of the country, you're still in a flood zone, but your BFE is like 500.
Right.
550 or something crazy. And the reason why is not that your house has to be 550 feet in the air. It's that the BFE is based off of mean sea level, right? So if your elevation is 300 feet from sea level, then your BFE is going to be like 310 or, whatever. So that's the biggest difference, is that just the BFEs they're associated with the area. So if there's a lake and they have a chance of flooding, which most likely they do, even though they're a lot higher from a ground elevation standpoint, the BFE kind of matches that. So, the Ozarks, you might see like a 420, 430 BFE. And that reason is because in the middle of the country, the elevations get a lot higher than, here on the coastline. And then to the opposite, Louisiana, you'll see like a negative BFE or like a 1. Like the BFE will be 1 foot. Which sounds crazy. And it doesn't mean you're building 1 foot above the BFE. It doesn't mean you're building 1 foot up in the air. It means that your ground's probably at -3 below BFE, and you've got to build it, a foot above BFE.
Yeah. And it sounds like there's another benefit of that, the other program you were talking about. Where it's like site specific, because if you go across the board, well, I guess across the board, it's still, you were just mentioning, it's just like, it's relative.
But, again, if you're taking into account one house value in Illinois, the houses are they're not as worth as much as Stone Harbor or even Miami. Let's say Miami's a bigger area too, right? So they're going out off a house value, which is in insurance. That's important, because $250,000 and $1 million house isn't going to get you as much as a $100,000 house, right? So that's going to take into account, the value, and then also the type of flooding, right? So there's studies that show, riverine flooding does this much damage, lake flooding does this, ocean flooding is one of the most riskiest, because if a hurricane comes, you got waves coming in, wave action, which has a lot more pressure than, a lake. A lake, you might get water, but it's not going to put pressure on the foundation as much as an ocean.
Because like we were mentioning flood vents, but like I had said, like, some of the houses, breakaway walls, which for anybody who's not familiar, and if you have a video, actually I have it here. I have a YouTube video of this as well. It's now a pencil holder, but it's a Lego model I built.
There you go. Of breakaway walls.
Wait.
Let
me turn the what you call it off here. Oh wait, I forget how to do it now. Here it is. Hold on, I gotta turn off the background thing.
It's blending in.
But so here's the breakaway wall concept is, here's your structure, but this can break
right out
easily, and then these all come off, so it's like to show like, okay, well, the water can,
and there's the pilings.
A very long time ago I built this for like
that makes sense, because people are probably like, what the heck is he talking about?
And then I actually have a separate one. Here's a piece that I can put in here, like, and make it solid. And if I push against the whole thing falls apart.
That's a good visual. I love it. I love it. We were actually looking at I guess they made a Legoland in New York or something. And me and my family were looking at it. It just opened. We might go there for a vacation or something.
They actually, they have one in the Philadelphia too.
Oh, Philly? They do?
In King of Prussia.
Oh, wow.
It's more of an indoor thing. But I actually might be
tell my wife.
I might be going there.
She looked at the one in New York, and I want to say it was $1,900 for 3 days.
The one here in Philly is more of a day. You go there for the day.
Okay. This is like a resort,
Like, and I would assume it's probably close. Like I've taken my kids down to Florida. We've gone to the one in Florida.
That one's cool.
And it's an amusement park, right? So, but I'm sure the New York one is probably
they have
a
like
little bit closer,
I think, and stuff.
But obviously with me, I grew up with Legos.
As an architect,
as a requirement when you try to get your license, they're like, "Did you play with Legos as a kid?" Like, yes. You're like, "Okay, you're in." That type of thing.
100%.
No, it was a very simple thing about that. But we were just mentioning, like, we really didn't talk. We were talking about heights of water, but we weren't talking about forces. Of water,
right?
And
I just had pressure.
And so the ocean, with waves, whether it's a hurricane or not, that's always going to come into play. And then obviously the wave force at the ocean, and you said it, is different than the wave force that a lake's going to have.
Yeah.
But what
Yep.
about, how about some products outside of the house? Because, I've dealt with properties, and we were talking a little bit about it before we recorded, of, I have bayfront properties. So these bayfront properties have to have bulkheads that hold
Yeah.
hold the land from the water.
Yep.
And I was saying to you before about how I have a client right now who has to rebuild their bulkhead, and has to be higher because the flood elevation is different from when they build it,
Right.
So in response, so what kind of products, or things that you've seen that can help out a property owner in those situations?
Yeah. So one of my parent company, it's called floodproofing.com. If you're interested in products at all, I recommend going to the site because there's 30 different products.
Mhm.
A lot of it's dry floodproofing. And the difference is that dry floodproofing, you're trying to keep the water out, right? You're trying to stay dry.
Yeah.
Wet floodproofing, it's like the vents, you're letting the water through. From an insurance standpoint, dry floodproofing only helps commercial properties.
Mhm.
It doesn't help residential properties from an insurance standpoint. From a protection standpoint, though, we've had customers purchase dry floodproofing products to prevent, water coming into their houses. Bulkheads, like you said, there's this thing called Fenix flood glass. It's perfect for bulkheads and walkways. Like we imagine it being in like Miami on a walkway, right?
Yeah.
And basically it's glass, single panel glasses that are massive. I mean, hundreds of feet, huge, or they could be smaller too. We've had ones that are just windows, right? They're just the size of a normal window.
Mhm.
And they're tested to prevent log impacts, water impacts, all that stuff. And they're waterproof, where they're not going to let the water pass through. They're not going to seep. They're not going to crack. But also, they're not going to distort the vision, because that's a big thing. An example I'd give you is you go to the aquarium and you're looking through that glass, right? It kind of distorts your vision. The water sometimes looks weird, or the fish, when they go through a certain, point, kind of look distorted. This has none of that. Because we want to keep that aesthetics, which, we've done massive buildings in New York and Florida and stuff like that. But that's a perfect option for a bulkhead, because as these heights get higher and higher, we lose what people love about these properties, right? People buy these properties for the views.
Right.
It's location, location, location. I hear it every day in real estate.
Yep. Yeah.
And people buy these areas like that Stone Harbor house. The guy bought it because he wants to walk outside and look at the beautiful scenery that's out there, the ocean or bay or whatever, whatever it is.
Yeah.
And because these heights are getting higher and higher, it's starting to remove that from it, that view from why they originally did it. So we're trying to innovate products like Fenix, and we have other products as well, to where they just bring the product out during a flood, and perimeter systems that go around the perimeter of the whole property. We did a property down in South Carolina where we did a perimeter system around the whole residential structure, as well as they had a huge garage that we went around. So when it floods, it's a zipper system that kind of sits like this around the property, if you could imagine that. And basically the weight of the water holds it down. So the water is holding this part down, and then this is made of Kevlar and stuff like that, so that it's holding the water back. So there's a ton of new products that are coming out literally monthly, yearly, because it's getting bigger and bigger. We know that extreme storms are happening. And that's why the industry is getting bigger. Because before, even 20 years ago, it was sandbags. That was your option. Put sandbags out. And sandbags work, but it takes a lot of work. You got to move them, you got to put them out. And there's systems that are coming out that, whether it's a glass that's there or whether it's a perimeter type system, we have passive systems that go into, like a driveway. When water fills it in, it's like a trench. The system lifts up from the water pressure.
Like floodgate.
So these products are coming out more and more because of the exact reason you said, of that they got to build higher and they're losing what they love about that property, and these products can help with that.
Right. Yeah. And I think, you were mentioning how, you have a lot of these products are for commercial business, because a commercial building, again, like when it comes to the floodplain, has different rules than residential.
Yep.
Like they don't necessarily have to go up to that floodplain level or freeboard or anything like that. They can have a retail space is going to be at sidewalk level. So if you're in a floodplain, some of those other products, whether it's a flood, I think floodgate might, because again, it's passive, it just happens automatically. But I think there's a lot of use of the I'll call them, I don't know if manual is the right term here, but
yeah, you're right. Yeah.
But yeah, you take out, like I've seen some of those, I've seen ones that are the glass that you can bring out by hand, or other ones that look like, like a Jersey
Metal
barrier type.
They have stop gates. We have panels.
Yeah.
They're lightweight, and they're made of like this hard plastic type material.
Yeah.
Bolted into the doorways and the windows and stuff like that.
Oh yeah. So. Yeah. I didn't even think, I forgot about those. Yeah. Where the post and the panels. Yeah.
Yeah. Stop logs. Yeah. They're coming more and more out. 4 years ago 5 years ago is when this started getting big.
Oh yeah. Cause like you said, it's like, there's more and more storms and all of that. And we're not all, not the Floridas. They're funny. I just last night I was, sharing, there's a guy on TikTok I follow.
Yeah.
He's a guy from Florida and he's a comedian of some sort, but he always has these things like he's calling, he's making a phone call and he's got a little thing that says Florida.
Yeah.
So he's Florida and then he's calling hurricane season. And then hurricane season is like, we don't like you, man. Like, stop calling me. You guys just want to throw parties and stuff. You don't care too much. But
hurricane parties.
But yeah, it's just like, something. And I'm sure, you mentioned like Miami and stuff like that. Like, they actually have that floodplain stuff, but they seem to be a little bit more prepared, I guess.
They're used to it. It's every year. It's literally it's every year. It just happened. A tropical storm just happened a week ago. They're used to it.
And it's like if it snowed down there, like
everybody's like, what's going on? And Georgia. I mean, you saw, what was that, 2 years ago? There was like a massive buildup on the highway from snow, and the snow was like this much.
In Texas with the cold this past year,
all the pipes froze and stuff.
So
because I had a meeting with Houston, because I work a lot with these communities from a flood standpoint, a floodplain manager standpoint. And they had to cancel because they're like, our office is closed. All the pipes froze and now they're bursting, because that's what happened. They froze. Then the heat came back and they all started bursting.
Right.
And it was crazy.
But all right. Well, Tyler, why don't we just wrap this up here? If you want to give just, where people can find you and all that stuff.
So my website's www.riskreductionplus.com. All of our info is on there, our phone number, our general email address, all that good stuff. And then I'm on Facebook and LinkedIn a lot. Tyler Ardron. And I try to post videos about flood insurance, the National Flood Insurance Program, what's happening, and updating people with that. So I definitely say connect with me on there. And then that's pretty much it.
And you provide services across the country?
Yeah, nationwide. Yep.
Okay. Cool. Well, again, thanks, Tyler, for coming on. And I appreciate you, geeking out about this. And we'll and stay on actually after we stop recording. Okay. I've had people like leave after I'm like, no, wait, hold on. Again, I appreciate you for being on, and maybe we can do this again sometime.
Definitely. I appreciate you asking me to be on, Rich. It was a pleasure. And looking forward to the next one.
Yeah, great. All right. Thanks. All right, everybody. We'll see you later.